Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne, my partner Ryan, somewhere working on our market outlook, which should be coming out later today. It is Sunday, January 15th. It's a little bit in front of 3 p.m. on the East Coast, and we're going to get back at it again. So let's just flash a few important things, and then we'll move on. Here is our trusty disclaimer. Please have a quick look at that. And also, please take a quick look at the intellectual property rights notice here. And again, educational purposes only, really. So trying to just do what we can here, help out a little bit. Let's now switch over to, I've got to switch my screen. I guess it wants me to use screen 4 now. So I think I've got, hold on, let's make sure it's working right. Screen 4 share. Okay, that's good. So I think we should be seeing a grid of the sectors that we cover, that I cover in sector situation video a little more in depth. And just wanted to start here just to kind of show that some of these moves in some areas like communications, transportation, even discretionary real estate back up, basic materials a little bit too, but I guess technology overall, you could throw that in there, but these have really jammed up. Financials did too. So we're in an interesting situation where a lot more obviously turned bullish, acted bullish. We've been noting that for a while, which might be a good idea for a change, just to recap a little bit. So let's do that. But I think they may be a little ahead of themselves. I think they're a little bit short-term overbought. So let me minimize this, and hopefully it's got the right chart up, and it does. Yeah, so this is we're actually on the Qs. Let me start out with the SPY, because that's our main focus, and a lot of it extrapolates to the other major index ETFs. And we chart those so that if folks want to use levels to trade them, a lot of folks prefer, of course, trading the ETF to the cash index. Not so easy to do, a lot pricier, so on and so forth. But here's a pretty good view of the SPY, and we were finding it very difficult in here for about 3 weeks in a row, three Sundays in a row, roughly, to really lay out what's next. And so we had to really settle on this range. And as I've noted before, Brian McCormick, who does a nice job with the charts in the elite room, and of course on cocktail hour, etc., rapid fire, he had this traced out in hourly. He likes to look at the hourly, I think, and so very similar levels. And we were waiting really for a break. We essentially were saying go for singles and doubles while in here, wait for a break. And it started looking like right before last week started, and last week started there on that candle, that the way things ended up, we were a little concerned that, hey, maybe there was some options expiration stuff. Can we trust this? But it was pretty solid. Problem is, right, that anybody that thought, hey, I'm buying the breakout, they were looking good for a little while, but by the end of the day, the gang, and I'll bring this to a higher magnification, the gang worked it all the way back down to the top of the range. And then this became almost like a textbook thing. They just happened to do it, instead of doing it over the course of 2 or 3 days, they did it over the course of 2 days, where it was essentially threaten a breakout, begin to break out, begin to run, reverse. This, of course, had to do with Bostic's comments, which that was what it was attributed to. But they found support there on the 100 SMA there in gray, got a little bit above the 20 there in light blue, worked it back above the 50 and the 150 in gold and rust respectively, which left the purple 200. So that's the review. So the breakout mindset, once we got through here, was the right one. But if you jumped on it early and you didn't react to the Bostic news, you may have been very frustrated by that. I'm sure a lot of folks were. It did then move to the 200. Our thought was that when it gets within striking distance, that that's pretty good, right? Like you go within striking distance. That's a pretty good shot that you're probably going to at least try to make it there, and it did. So it made it there on Thursday, and then we kind of got this somewhat indecisive candle, and then you could see Friday was another strong push above the 200 to close there, but you could see that a little bit later on the volume there. So not sure about that, but this gap that we talked about did get closed. So all that kind of stuff played out, and we have been noting, let's get a better view on this. We have been noting, and see, a lot of people are seeing kind of inverted head and shoulders in here, and I don't argue with people that see things, but both patterns sort of argue for the upside anyway, which is a potential cup and handle type pattern, or some people that see really more the inverted head and shoulders. I think I see one in here, but a lot of people are calling that a head, now. So whatever, I've just seen a lot of people say that. I think, Brian might have even said that. It's all in the eye of the beholder. It's showing, it's a distinction worth making, I think, but it's not something they're both bullish, and I don't really rely on patterns only. So it doesn't really worry me all that much. But now, right, as we noted the last couple of weeks, if it did start doing this is the big resistance line. We've talked about it many, many times over the course of nearly a year since we had to first start sketching it out. So there you have it. That's your look right now. I do think, looking at some things, that the market finished in an overbought condition on some of your heavy duty intraday charts. So you've got charts that maybe like your 4 hour, your 1 hour, those things got up there. And so I do think that this is interesting, that we could continue to go, but I would think that there could be a pullback first. And I mentioned that on cocktail hour that, I like to see how things act when they go back down after they've broken out. And if it comes back and closes this kind of like a little mini hidden gap near the 50, that would take the short-term overboughtness out, let them prove that this breakout's really trying to hold, and then try to go again. Now that's sort of idealized. That's, if I'm a bull, I'd rather see that, but they may just keep it going, right? What I would say though, is if they really get follow through by the time the market opens, and if things have really picked up abroad and they're kind of running stock markets globally, then I would say, look, that's probably, if they goose this thing and on a big gap open up towards here, I would take the money and run. Like if I came in long, I would not play games on getting out and taking that money, because I think you'll be really an extreme overbought on the intradays, not on the daily, but on the intradays. So that would be how I'd handle that coming into the first trading day of the week, which I guess would be Tuesday this week, because I think we've got the Martin Luther King holiday, if I'm not mistaken, on Monday. So that's where things shape up there. I think it's pretty straightforward. Guessing what they do the next day, I don't know. But again, cutting to the chase, they open this thing and run it up to near there, or even open it there, I would be a seller if I brought longs in, because I think then you'll really be, again, very, very extended in the short run. And then if they work this thing back down, which is the smarter move if you're a bull, close the gap and then find a way to start rallying toward, that would give you an even higher base camp, right? Sort of to work from, that you came down to the top of our former base camp, as I like to call it. You found support again where you should, confirm that support is now there, and then you go, and it would be a good 2 or 3 day jog to get up there, but it would probably put you in a better position in terms of overboughtness. So we'll see what happens. I mean, a lot of the other major indices in the form of ETFs that we'll look at acted really well. I would say IWM acted very well, having taken a quick look at it. Let's try to zoom in a little more on that. That really did some nice work there. We had that in the SPY and the IWM. I think both of those may have been in our UOA Essential. So folks that traded that on Tuesday, really, it didn't look back. And I don't know. It could have been UOA Essential. So I don't know why this Zoom's harassing me. I started the meeting and must not recognize that. So close on the high. Intradays are very overbought here. So the heavy duty intradays are very overbought, and you're at resistance, right? So never can say never, but you've had bulls have been in control of this one. You're back above the 200. You're hitting resistance where it's turned before. If I were long, I'd be very careful here. You could keep riding the long. I would just bring that trailing stop up and continue to tighten it, kind of like parabolic stop and reverse. That's what I would do. PSAR, as some people call it. So that's what I would do on that one. Otherwise, right, you would just, again, you want to see the normal course of a trend unfold in a better way by getting a little bit of a back off when you're overly frothy, come back in a little bit, prove that you can remain above that 200, which is now above all of them, and start to do more work to potentially reverse the trend. Because remember, this is a higher kind of clusterish low, very clusterish, right? This rounding low that we see here. If it takes off through here and breaks out, you'd have higher high, higher low. Now that kind of brings us to, the other points I wanted to make. I think that, the recap we kind of have done here, where we started 4 weeks ago, just waiting to see the whites of their eyes, short-term overbought now. But I think what's happening personally right now is that a lot of folks are trying to front run this ultimate Fed pause, and they may be right to do so for all I know, but I feel as though they could run this much further, I think, too. But I just think they're really, really jumping in very aggressively right now. I guess there's some FOMO that's starting to kick in. Maybe there's some frustrated shorts that are chasing this to just say the heck with it. I'm closing this out for now. I don't really know. My sense is that there's going to be a lot more negative macro stuff that hits, macroeconomic stuff that hits in the US. I also think that there's potential for a lot of geopolitical stuff that could be big. That stuff can come out of nowhere seemingly, even though it's been sitting there percolating for a long time. You could see something like that as well. So I think what I do when I'm not so much of a believer in something is I'm not willing to let it be on that long leash, right? I'm going just like this. I'd rather, if I'm trading this long still, because that's where the momentum is, that's fine. But that once it's made its move and it's very aged, let's say for what we typically see in swing trading, you got to kind of have that clock in your head, that timer that says, this is getting up there. I've got to be really tight with my stops and not give too much of what I got back in. I should probably roll. I should probably over roll. I shouldn't play games here. But I do think the potential is there for more. Having said that, I'm just trying to contrast the short term and how we handle that, and markets we don't trust and how we handle that with what's happening in longer term or bigger picture. So I do think you could see, if they bust this stuff through, I do think you could see months of upside movement, because the bulls just continue to assert more and more control over the market, and they're very close, I think, to reclaiming full control of the market. And it sounds weird because I'm really still a longer term bear, but I would, again, that we're trading in the here and now, so we don't really trade our opinions, right? We trade the action that's in front of us. That's what we focus on. That's why me saying something like, "Oh, by July, after July is over, I expect this thing to roll over." What does it matter now? To me, all it can do really to think that far ahead, I think, is help you in terms of positioning for volatility, being prudent, being respectful of risk. That's what helps you. But trying to take that long range, I think things top out and roll over. Bringing that into now, I don't think that's going to help us. So I think we're better off sticking with what we see in the here and now and adjusting accordingly. That's what you have to do anyway. It's not like we can pick some other version of the stock market somewhere else, some many worlds other version of the stock market, and trade that one. We've got to trade the one we've got here, at least on this timeline. So having said all that nonsense, I think, yeah, sure, there could definitely be more upside. I just don't know. I kind of am thinking of it, at least right now, as more of a the gang doing what they always do, which is at the drop of a hat, again, a mild breeze, these people start buying stocks. They always think anytime there's any corrective activity, they're getting the deal of a lifetime. They may turn out to be right. I just think that they're getting ahead of themselves, because I'm not so sure that if the market goes back up and the economy doesn't really go into recession, which I think it will, but whatever, just one person's opinion. And that's where I think more of this negative news is going to hit. And negative news tends to hurt the psyche, in my opinion, of the consumer, and companies start to lay off more. It becomes a cyclical thing. So I'm looking at it saying, no, I still don't think these problems have gone away. I think they got stocks way too overvalued post-COVID. I don't think that world is there anymore. And I'm looking at the Fed saying, okay, you want to keep the market higher, that's fine. We're going to leave rates where they are. And what we will do, if you think the economy is wonderful and so on and so forth, is we'll just continue to reduce the balance sheet. And reducing the liquidity, in my book, liquidity is a big deal in the market. So if the Fed's providing a lot of liquidity, stocks, in my observation, right, from trading all the years I have, the stocks typically rise when the Fed's adding liquidity, and they tend not to when the Fed isn't. So, if the Fed starts to use a strong market and a stable economy as a reason to leave rates there, and then I think they'll move over to that balance sheet reduction. And again, that will drain liquidity. And so I think, I think there's an opportunity here to frustrate people. They might be doing that. They might be frustrating some really heavy duty hedge fund bears and things like that. It could go on for a while. And again, in the end, it could turn out to be legitimate. It may be like, hey, they were right to buy completely. I'm looking at it more as maybe like a multi-month development, where I think reality, the reality that I know that's out there, or I believe is out there, put it that way, that is going to come crashing through, I think, more and more. And I don't know if that's going to really help the situation, if they really re-jam this market in a big way, which I think they could, because like I said, the bulls are coming in and they're really asserting more and more control. Even though I didn't mention it on the diamonds or the Qs, like they are also, of course, intraday overbought. So I would be really careful. I would keep a really, really tight stop and a couple of eyes on longs you may have brought into this week on the strong closing action, or new longs that you establish if the market opens, say, in a stable way, and you decide to go long, you see some momentum developing. I would just keep it on a short leash, because I do think all of them are overbought. But as I said, and also these sectors that we looked at, where are they? Should be here, I think, for us, and that's wrong. I have so many little sector charts that I'm trying to guess where I left that one there. No, that's not it either. What am I missing? I thought it was this one. Oh, it is. Okay. It just popped up on the wrong spot. But the one we started with here, these are getting up there. They're not overdone on the daily. You can see the little daily RSI labels I've got up there. So that's all well and good. But I mean, even so, 67 on transports, 67 on financials. The communications is at nearly 69. There you have it. You get the idea. So that's kind of getting there. That's a little concerning. We'll talk a little bit more about that in sector situation. But that's where I am on the whole situation. There's just a lot that could keep hitting this market, and that would eventually catch up with it down the road. But that assumes that they even are successful here. But we have to be objective, right? That's what we're trying to do here all the time, really. But certainly when we're trying to think about the week ahead and what could happen and what's the state of the market right now. And I'm really looking at it and saying the state of the market right now is that the bulls are trying to seize control more and more. They push things probably a little too far, too fast in the short run. We've got to wait to see how this behaves If it does back off, like I think it should, I'm not saying it will, but that I think it should, and then how it acts again, if it does work its way, holds and works its way back up. Clearly, if it fails and you go back into this range or somewhere near there, then that would be a real disappointment, I think, for bulls, right? You'd have to wait and see what happens next. But I think everybody's eyes are on this point right here where I'm about to put the cursor, because of that resistance line. It's not like we're the only ones drawing that, right? Like everybody that charts, spends time charting, probably has a very similar line to that one. It's pretty hard not to. I mean, it's a tremendous line that has mattered. You know, there's some major tops along this whole corrective phase that this hit and reversed from, and it even did it, you know, on this double topish one here. We got that pull back there. So it's a solid line, and it's obvious that, much like what we saw here, I like to remind people, because I know there's some new people watching this, right? When trust me, pretty much everybody's focused on this type of thing, right? This resistance we were looking at, resistance that's right here. So that's why you got to be on guard for the false breakout, right? That's why if we do get a breakout and you trade that breakout, right, you want to be able to get through and close above highs. But still, even having done that, there could be a pullback. So what do you do, right? Well, if you're trading in intraday and you just got in, things are working, do the old, or at least consider doing the quick trim. I call it the quick trim. It's just, if you're using a base of 10 contracts held, sell one or two of them, sell two or three of them, whatever fits for you. But that way, right, if you do get the false breakout, you still eke out some profits. If they continue to squeeze and go, you're still riding 70 or 80% of what you own, and you're happy. I mean, I love being wrong about my quick trim, right? That's what I want. What, you know, I want to look back and I'll probably look back and laugh and say, why'd you trim those two, dummy? You know, and that's a great feeling that you were dumb to trim those two, because it just soared in your face. I mean, I love that I still hold 8 and the rest are soaring and soaring and soaring. So, and it just kind of put a bow tie on the whole thing about this. Remember, we talked about, there was a lot of UOA, excuse me, that appeared for SPY and IWM during this corrective consolidation, this phase here. Excuse me. And the reason why that's important is we said that we thought the market was getting primed to potentially make a big move, and they were buying primarily puts, and there's just kind of proof is in the pudding that a lot of times, right, they're loading up on shares and they just want they want to hedge them. They want to hedge them with puts, right, to make sure, just in case something breaks, that their bet doesn't get blown up by a gray swan or whatever you want to call it. So there's a good look at things, I think, just to kind of talk about a lot of things we've talked about lately. What I'd like to do, if I can find it, is find the, oh gosh, where is this? How did I mess that up? I had something set aside that was, it might be this one. Yeah, so let me bring this over to here, and let's take a look at this. I've got these laid out for us, and I thought I had them. There it goes. Okay, so hopefully you can see this again, but here is the percentage of stocks above the 20-day average, and you can see this thing just clipped everything really since everything we saw in 2022. So this has been extraordinary, right? The kind of shift that we've seen, and we have been noting in macro measure and sector situation that under the surface that things were improving. You know, we noted that, you know, just to keep an eye on it, because we like to have that type of stuff in our favor. If I can get the internals, or if you want to call them the market breadth indicators, if I can get those things to be working in my favor, I'm going to take that every time. It's gives me more confidence, right? That, hey, that they're buying the stocks broadly, but this is overdone now, right? Like, this is really at a level that's gotten overdone. And really the 50 MMFI here at Market Rebellion, the trading view charts that are in UOA Elite, these you're there now too on this, right? So you've gotten up there. I'm not saying you can't keep going, I'm just saying that, look, you're getting up to levels that are typically pretty darn high, and usually right after this, it hasn't been wonderful. So just keep that in mind in terms of managing your positions, that short term overbought. There's been this really strong rip. It has really been, the market breadth hasn't been improving for some time. I mean, you could see that these things improved significantly right from the major lows that we saw. That's why when this was happening, we kept noting that, right? That, hey, look, slowly but surely they're turning this thing. It's putting in higher highs, higher lows. At SMAs, the simple moving averages are starting to upslope. The shorties are overtaking the 50. The market breadth continues to improve. That's why, right, we were trading this, once at the bottom was in, reversed out of the Bollinger Bands. We talked about that last week. A lot of these things just paint a picture for you, tell you at the very least, like, don't fight this, like if you don't want to embrace it because you're still a long-term bear. I get that. I'm a long-term bear too at this point, but I'd have to start thinking more about do I really want to be a committed long-term bear if they start taking out highs, closing these little tiny gaps and all that kind of thing that are up there? Could they monkey around with this thing for anywhere between, let's say, 2 to 6 months or so? I think they can. I don't know if they will, but I mean, they're close to getting a very important step at least started here if they take out this, what's been a pretty good resistance line during this bear market phase. So it would be a pretty short bear market, I think, right, to top out here, and then within maybe 12 and a half to 13 months it's over. Could be. You never know, but I still have my doubts, but I have to respect the charts right now. Like, that's what I'm trying to respect right there. So let's go back to, we were where did I leave off? Why am I having such a hard time finding this thing? It's not new tab. Where were we on that? That's frustrating. Usually I've got this thing set aside and I switch back. It would have to be, it's not showing as market rebellion on here for some reason. Let me just minimize these. There it is. So let's go back to where we were on my tabs, and you're in greed right now on the CNN. Again, imperfect, but still you're in greed. And so it's been a pretty big jump. Let's see if they have no, I think you have to click up to the timeline. Yep. So you can see this has really made a big move, certainly from the lows that things have improved and improved. You're getting up there towards right where we were in July, I guess, or what is that? No, I'm sorry, August, my bad. And then late Nov. So you're not extreme, but you're getting up there. And then this other one that we've came across, this one is 75% of stocks in the market are in an uptrend. So there you go. That's pretty steep, right? That there's that many. Is that yep. So that's got the right update there. For some reason, I think it's getting clipped over here on the side. I don't know why, but we're in greed theoretically there. If they're still up, assuming they're still updating this, because it's kind of weird that they've got that there, but you're not able to see it. I can't do anything with that. But assuming that's still active and we just can't see it properly, or they haven't updated the chart, they've got it at 75, which puts it up here. That's pretty high. And then kind of jumping out to the halfway point of the year, you can see that the expectations here at the Fed watch tool, current target rates between 425 and 450, they are expecting, right? Most folks still are expecting rates to only be up a little bit more from there. I think Bostic may have come out and said he supported just 0.25 or 25 basis points at the next meeting in early Feb, a couple of weeks away. Still, there's a potential for 50 there. That seems not something you could dismiss from where we are now, but maybe they'll do 0.25 and 0.25. I don't know. I guess we'll find out. So that brings us to, and sorry for the little struggles there. Let me see if I can just get my simple chart. It's noisy looking, but it doesn't have as much on it as you'd think. But let's take a look at some of the big names, and then we'll kind of wrap it up here to see how they're doing. And let me get this stuff out of my way here. So a little more control was asserted by the bulls. And I think that Apple, oops, it's not flashing my other stuff. Apple isn't as overbought short term, but I do think, right, you kind of need to, I think you're going to like that candle if you're a bull there that we saw on Friday. Only thing is you probably would like to see with a little more conviction, but that kind of bullish engulfing type situation, holding above the 20 is pretty good. It's on its way, but I mean, you can tell this doesn't look as good as the IWM. And this is why, right, if you're saying, well, who cares about that? Well, the reason I mention that, right, for folks that are newer is that if you really think the markets look like they're about to run, you want to try to find things that look like they're about to run more easily or run the most. And IWM has had a better look, and it's been running strongly, right? So another one we looked at, I'm kind of jumping ahead to another big name, but we said that about Berkshire, right? That Berkshire was very strong, and you could see that, you get the turn and they just want to keep working this stuff up. So you get this kind of reliability out of things that are acting well. We saw that, but I would say, look, Apple looks better, a little bit close to short-term overbought. That's the big message, I think, is that you've got to keep in mind that things are looking better, but they did get short-term overbought. Microsoft, you can see that it's right beneath. This has, by the way, like Apple and Microsoft have room on the dailies on RSI. So please don't misunderstand me. I'm just saying on the heavy duty intradays, a lot of stocks, including these, got close to or are at overbought levels on RSI. You got to like this, I think, too, overall here, that if you could get above the 50 and the 100, that wouldn't leave much, right? So it's kind of strange to be looking at these mega cap big names as laggards, but they are, right? It makes sense when you look at where the Qs are. So, but this just took out this resistance line that I've got in here in blue, and so it's looking better. I would try to give it, long as the market manages to stay buoyant. Look at every day we've seen bulls just trying to reassert control more and more and more. And they don't have full control the way I look at it, where it's like, don't play games against this right now at all. But they're getting close to grabbing full control. So that's not that. I don't want that. So they're getting close to full control. And that's very interesting because, it sort of boggles your mind. Like, how's that even possible? But, I've seen this so many times before with these guys, as I call them, the gang. I've seen them do this and just frustrate people many times. And I think those people were right in their take on things, but the gang just has deeper pockets and they outlast people. And like I said, they do very well at short squeezing. They do very well to make people, react when they really don't want to, and they just keep applying like that pain, as they call it, the pain trade. And they just keep making it more and more painful. But pretty good line there, I think, in Google, and it's leading up to earnings. And, again, another one that's intraday overbought. But if I didn't think the market itself was overbought right now, I would be willing to see that. I think this thing's going to try to work its way up towards that 100 there. That would be my next, aside from flat lines that Ryan would have. That's what I would think, right? So again, in a buoyant market, if it can break through and get above that 50, which is not very far. I think I even have an idea on this one right now in UOA Pro for that reason, because it's hard not to, I think it's hard not to like that chart. I mean, just to kind of add a little to that, why would you say that, Wayne? I'm looking at it like similar but higher low, cluster low over here, and just look at the RSI readings, look at them just improve, right? So the relative strength just eventually, you just get that kind of improvement or relative improvement, and then you get usually you get a nice follow through when that kind of complexion's in place, just from having seen it so many times. So got to get through, right? It's got to break out first, though. We never count our chickens, as they say. Maybe we should be talking about the eggs instead, because they're so. I think that the store I was at, I bought a rotisserie chicken from a pretty good store. Granted, it was a discount the day I happened to show up, which I didn't know, but I bought a rotisserie chicken, and then I went and looked to get some eggs, and the dozen eggs were more than a fully cooked rotisserie chicken. That's a quality poultry, by the way. It wasn't something, some garbage situation. So just very interesting, right? That eggs are costing that much. Big talk around the country, but it is where I am. It is pricey. Another, I don't know how you don't like the day in Amazon too if you're a bull. The only problem becomes the overboughtness. I mean, this is more overbought by far than Google right now. Had a good week. I don't remember where we had this one. I know we had it somewhere. May have been UOA Pro, may have been UOA Essential, may have been both. But yeah, it had a really good performance, right? If you're a bull, again, let's just do this, and you can tune out now if you're experienced, but you can see these lows, and you can see this improving situation, which folks refer to as positive divergence of the RSI. And it was easy to add this one. More, I kind of liked it more as a bull, the way the market's been acting. Took out highs on a closing basis, right? So if you could get, the first high it took out recently was that one, and then it backed up a little, took out this high that it had made, just a day later, but then it took out this high. It's taken out this little swing high right here. And that's really good price action that you want to see coming out of this. And it's got this gap to try to work with if they continue to go haywire here. And I think they're going to try to do that, because I think they're already taking earnings and they're giving it a little bit of a shrug if it's not such a great report, and then just buying anyway. It's almost like they're planning on buying into with the news we know now. It almost looks like they want to buy into what the Fed does, run it into the Fed, and then see what happens. But no one could be surprised by that, I don't think. That's how these guys they use major news events like that to drive the market into, and then have it react. Berkshire we looked at. I think it's been doing well. It's back up towards the highs, but you can see, and I probably should leave the RSI a little larger at this point, but you can see the lower RSI reading. So I would be a little concerned there. Maybe it's going to kind of be a victim of its own success, where maybe this will see some rotation out of it into other beaten down names that haven't ran as much, that are maybe represent better long-term valuations, or right, just that folks that are hedge fundish just think, hey, that's ran, it's fine, we're not going to get the juice out of that, we'll get better juice out of other names that are big and still beaten down. Just throwing that out there. I can't say for sure. Exxon, kind of a little bit frustrated. I've been charting this for a while, and in sector situation, and this goes back, over a year. We've been doing these things to try to help out, and boy, it took a while, but it's working its way back up finally. And it has that all important level that's not far away. So this has been kind of like, I think we did a good job waiting for this to correct, and it did. They held on. It looked a little scary there. They've had it hold on. They've kind of like very deftly either had it waft back up so they can pull the rug, or they've worked it back up in such a frustrating manner that they don't have a lot of company along for the ride with them. But there's a support line we could put in that would probably dovetail very nicely with a flat line, which I think you could see ballpark it at 111.50 for now, 111 if you want to be a little more conservative. But it's got all the SMAs below it. They're all upsloping pretty much. Maybe the 50s leveled off a little bit there in gold. But you got to like that, I think, overall. And if you look at it as, okay, there's a big, strong push, correct pullback, corrective action, and they start breaking it out again, they could tack on a lot there. Again, at this point, I'm not predicting that, but I do think the bulls, they were risking control, but they're definitely back in control for now. Maybe they're going to drive it into earnings and see what happens. But yeah, I mean, is a little bit overbought on the intradays, but the bulls are fully in control in that name as far as I can tell. And I certainly wouldn't fight that thing until I see some crack in something or some news develops, but I'm not fighting against it. Let's see, UNH. Wow, what a candle that is, if that's the right price action there. Wow, I don't know what to say about that. That is probably one where you'd have to take a look at the news and see what developed, which we don't have a lot of time for. It's very close to breaking below those lows. So wow. Yeah, I'm going to put a little asterisk next to that and just say, look, take a look at it, because I don't know what happened there. And I don't want to go, this is not about reviewing all these big names in depth. Not to be nasty about it, but just, I don't want to have this drag on forever. But that's something's happening there. All those SMAs are down sloping too. So maybe a quick bounce you get out of it, but it looks a little scary to me. I don't know why it would act that way. J&J, from UNH to J&J falling below the 200, another one where maybe thought of as more defensive, and now they're working that back down. So that big name, under a little pressure. You can see the short-term SMAs are rolling over. Maybe it finds support right here for all we know, but looks a little concerning that maybe they want to go more risk on, and J&J isn't really a high beta name, as we all know. That's why a lot of people like it for those reasons. NVIDIA, I mean, I think you really have to like that. I'd have a hard time not liking that. I think a lot of the only negative here is I think a lot of money got put back into that, and probably, I won't call it a crowded trade, but it just, a lot of people are thinking the same way. That's always something that you have to be cognizant of. Very overbought in the short run, has a little gap there. So we're going to have to do that. And I think I might have to wrap up here. One or two more, and we will wrap up. And I better do it quickly because I can tell there's an issue developing behind me. So hold on a second there, Chief. So let's do Morgan, and we will do Walmart quickly and Tesla, and then I'll probably wrap it up. Wow. Yeah, that is wow. I mean, that is overbought on the intraday, so be careful. There's not a lot other than overbought though, right? There's not a lot to dislike there. And then Tesla, we'll do, I'm jumping to Tesla. Okay, be with you in a second there, pal. And this is going to be tough. I think I have a dog that doesn't feel well. Well, look, let's do it this way. You need this close right here in a strong market in Walmart. Had a decent run, consolidating, really close, right, to asserting itself above all SMAs if it can reclaim the 50. But you really want to see that close get exceeded. And that's not too far away. It doesn't have a big ATR, but overall, right, nice pullback, finds support, starts working back up, and holding here above the 20 there in light blue, needs to work its way through and close there. And I would think that that's where it would try to do something. If not, use that low right there. That low right there on 110 would be the next one. And then we have to do Tesla, and I've got to wrap because I think I've got a dog that doesn't feel well. I've got to get out. Oh boy, it's always something interesting. Tesla, wow. Again, we talked about the possible bounce back trade. I think you have to stick with that for now with the way the market's acting. And I think it's clear that it's got to basically takes out the 20, or you want to take out that high. It's so beaten down, I probably want to see it do more. So I want to see it take out about 126. Then I start thinking about it working its way back up towards resistance in the 50. If it doesn't do that, right, very simple, just use Friday's low. So on that note, I do think I really have to wrap up because I got to get this character to go feel a little bit better. So thanks for tuning in. I hope something I share with you helps you out this week or maybe in the future. And we'll catch up with you in the webinars and so on and so forth. Thanks very much.